As a Forex traders, we all want to get those sniper entries like this one over here, but how do we actually do it? Well, in today's video, I will show you my simplest Forex entry trading strategy ever, the one that will help you to get those sniper entries you have been looking for. So I will talk about the big brother and small brother trading concept, the importance of top-down analysis, and how this plays a huge role in getting perfect price action entries for your Forex trades. So before we discuss our first concept, it's very important for you to understand the basics of Forex supply and demand trading. So we're gonna start very simple with a demand zone. So a demand zone is basically a price area in the market where buyers stepped in strongly before the price pushed up. Now on your trading chart, it usually looks like a small pause, a few candles moving sideways, and then you will see a big bullish push upward. So that little pause before the big move is what we mark as a demand zone. Now what you can do is you can draw it as a box around the last candle before that strong price action move starts, and it would look something like this. So this simply shows us that the big players, which means the banks and institutions, were buying heavily from that level. So we're gonna treat it like a cheap Forex market price, and if the price ever comes back to that zone again, we expect those large institutions to start buying their positions from that zone one more time. And this is actually where you also want to look for buying trade entries, so you're always trading with the institutions and not against them. Now a supply zone is simply the opposite, so this is an area where strong selling happened before the market dropped. And again, it starts with a small pause, usually a bit of market consolidation followed by a sharp move down. And once again, we can draw it as a box from the last candle before the drop, and this is where institutions sold previously a price level that was favorable for them for whatever the reason is. So let's say if the market comes back to that level again, we will look for sell trading opportunities because, well, the banks or large traders may still have unfilled sell orders around that price level. So understanding these supply and demand zones is the foundation for every Forex strategy that comes next, because this is how we will start refining our trade entries to get those true sniper trades in the Forex market. So now that you know about the supply and demand, let's talk about how the big brother and small brother Forex trading concept actually works. So let's say you are the trader who loves to enter on the 4-hour time frame, and we're gonna treat that 4-hour time frame as the big brother. So this is your main trading chart because it gives you direction, structure, and the bigger picture of the Forex market. Now on this 4-hour chart, let's say we spot a supply zone, which means we want to look for selling trades when the price comes back into that area. Now our target would be the most recent low, somewhere near the next demand zone at the bottom, and this setup already gives us a very decent risk to reward ratio, maybe something like 3.5 to 1, which means if you risk 1%, you could potentially make around 3.5% if the trade plays out. So I think we can all agree that that's pretty solid, right? But there is actually a better Forex trading strategy to do it, the one that gives you a cleaner price action entry and higher probability of success, and I will show you how it actually works. So we're gonna keep the 4-hour chart as our big brother, and then we drop down to the 1-hour chart, which becomes our small brother. So the big brother gives us the main trading area, but the small brother helps us refine our entry and time the trade more accurately. Now on the 4-hour chart, the supply zone usually looks very big and very wide because it covers a large range of the price action, but when we zoom in into the 1-hour chart, we will often find a smaller, cleaner supply zone sitting inside that 4-hour zone. So that smaller zone is where we want to look for our actual Forex entry. Now guys, listen to this very carefully because we don't enter the trade the moment the price touches the 4-hour zone. Instead, we wait for the price to move inside that zone and tap into the 1-hour supply zone because, well, this is our refined sniper entry area. And in that case, our stop loss, still covers the 4-hour zone to protect against a deeper market pullback. But as you can see, this simple adjustment dramatically improves your risk to reward ratio and gives you a cleaner Forex entry. And as you can see in this example, the same trade that was about 3.5 risk to reward ratio now becomes closer to 4.6. And that's actually not the only benefit, because your trading accuracy improves because, well, you are using 2 time frames that agree, which means you have 2 supply zones that lining up together. And let me tell you this, that when you have just one zone, the market reaction can be weaker, but when you have multiple zones stacked across different time frames, so like the 4-hour and the 1-hour, that's a very strong confluence in your Forex strategy. And this means that both the big brother and small brother are working together, and that's how you increase your trade precision, you improve your trade entries, and raise your chances of success in the Forex market. Okay guys, so now I think you have a pretty good understanding of the big brother and small brother trading strategy. Let's talk about top-down analysis and why it's absolutely crucial in Forex trading. And let me be completely honest that without it, your supply and demand trading strategy won't work as often as it should, and you should always want to trade with the trend. And to do that, you need to know what direction the market price action is trending across multiple time frames. So for me personally, I usually take my Forex trades on the 4-hour time frame, but before I enter, I always check the bigger picture, which means that I look at the monthly, weekly, and daily charts, and then I finish with my 4-hour entry setup. So what it does is simply gives me the full context of where the Forex market is heading overall, and there are two simple ways to identify the market trend. So the first way is the quick and easy method, which is using moving averages like the 20 and 50. And you can actually instantly see whether the price is trending up or down based on how it interacts with those moving averages. It's very simple Forex strategy that works surprisingly well most of the time. And then we have the more advanced approach, which is the one that requires spotting higher highs and higher lows, or lower highs and lower lows in each time frame. But this gives you a very clear view of the overall market structure and helps you align your price action entries more precisely. Now guys, you can even use the zigzag tool on TradingView to make it easier, because it literally highlights exactly where the price made new highs or new lows, so you don't need to guess. Now there's one thing that you should remember, that top-down analysis can be done on any time frames depending on your trading style. So let's say if you are scalping, then you can apply the same concept but with smaller time frames. So for example, you can use the 4-hour as your higher time frame, then go down to the 1-hour, then 15-minute, then the 5-minute, and even enter on the 1-minute chart. So the concept stays the same, only the time frames change. Of course guys, keep in mind that smaller time frames, they do have much more noise and less accuracy, but that's absolutely normal when you're scalping the markets. But the key point is that top-down analysis keeps your trading with a market trend and not against it, and especially when you combine that with the big brother and small brother Forex trading concept, let me tell you that your entries become sharper, your trades more confident, and your entire Forex strategy far more powerful. Okay guys, so let me show you how this all works in real Forex market conditions. So first of all, we want to identify the trend, because well, everything starts with the price action direction. So in this example, I'm just using the 20 and 50 moving averages just to keep things simple, and as you can see, the monthly, weekly, and the daily time frames are all trending up. However, as you can see, the 4-hour entry time frame is currently trending down, but that's not a problem, and I will tell you why. So as long as you have 3 out of 4 time frames trending the same way, it's still a very strong Forex trading opportunity. So next, we want to identify our supply or demand zone, and in this case, as you can see, we have a very clear 4-hour demand zone right over here, a small area of price consolidation followed by a strong institutional push upward. And now as you can see, the price is coming back down to retest the same zone again, and inside this 4-hour zone, we can apply the big brother, small brother concept. And as you can probably notice, I have marked a 1-hour demand zone sitting right inside the 4-hour demand zone. And this actually gives us a much more precise Forex entry to work with. So when the price reaches our small brother zone, that's when we can trigger our sniper entry and aim to follow that higher time frame bullish momentum. And in this case, the stop loss would be placed just around this level, and for our target, that would be the previous swing high. And as you can see guys, the trade performed really well because the concept is simple, but it takes patience. You need to wait for the price to actually reach your refined entry zone to get those proper sniper trades. Of course, you can trade more aggressively and enter earlier on the zones, like for example over here, but then your risk to reward ratio has to be tighter, because often the price will push and then dip down and retest the stronger demand areas before continuing. You can still win, but patience really pays off, because eventually you are getting better entry, better risk to reward, and better outcome. So hopefully this lesson helped you to simplify your Forex trading entry entries and gave you a much clearer way to approach the Forex markets. Of course, if you have any questions, please do let me know in the comments. And if you want to learn more about Forex trading, you will find the first link in my description box down below. And I also recommend watching this video next because it will help you to take your trading strategy to the next level. And as always, guys, thank you very much for watching and I will catch you in the next one. Bye!